The U.S. Market Update with Money FM 89.3.
All right, folks, a quick look at markets, and we've got a record high overnight despite all the action and drama around the government shutdown. Let's take a look at the broad market index. Slightly higher by 0.3% to 6,711, a new high. The Dow Jones Industrial Average also squeezing out a small gain, up 0.1%. We have the Nasdaq Composite rising 0.4%, the upper performer. And taking a look at what's playing out in terms of headlines, we have that U.S. government shutdown, and that, of course, after attempts by the Republican-controlled Senate to secure a temporary spending bill that failed on Tuesday night. Democrats are hoping to use the measure to codify an extension of healthcare tax credits for millions of Americans. So for now, an impasse, and to check in on how markets could fare in the next few days and beyond, let's check in with Michelle Schneider. She is the Chief Strategist for Market Gauge Group. Michelle, thanks for joining us on the show. How are you doing?
I'm doing fine, Ryan. How about yourself?
I am doing great, but it is quite an interesting time to have you on because we've got so much playing out in the markets. I'm just trying to figure out where to start. And I guess I'll start first with the market action. We were all a bit nervous about the potential for a U.S. government shutdown, but it looks like investors are shaking it off. We've got new highs on Wall Street. Help us understand what's going on here.
Yeah, well, we have new highs, but we have to look at where this is all happening. At this point, 75% of the higher returns are from AI in the S&P. They're 90% of the earnings potential, right? So essentially, we also are having this incredible almost like rotation of money amongst the giants. Like, for example, CoreWeave makes a deal with Meta, and then Meta makes a deal with NVIDIA. Or we saw this afternoon that Advanced Micro Devices making another deal with Intel. Or the government is supporting companies, almost like a reward system. You play nice with us, we'll support you. And so it's very specific. And obviously, a lot of money to be made if you follow that, or you just happen to get lucky and buy something like a CoreWeave, and then you hear that announcement of its affiliation with Meta, and the stock goes up 30, 50%. So it's not really broadening out the way people are thinking that it could. And that's kind of what I'm focused on right now. Well, there's a couple things I'm focused on right now. But in terms of the broadening out, one thing I want to say is we saw our first real crack under the surface today. And I'm not even going to, we'll talk about gold and all of that in a moment, but in terms of the equity space. And that is in something that most people don't think about anymore, but it's regional banks. So regional banks, and I like to look at the symbol KRE, that's the ETF, that actually broke down, closed lower, and closed under the 50-day moving average. And this is why, while we're seeing the S&P 500 and NASDAQ going, almost not parabolic, but higher and higher every day. So what does that mean? In 2023, this happened. And then the stories came out about the bank failures. Regional banks are not the big banks. They're not the Wells Fargo and the JP Morgans. They're the rural banks that middle America, for the most part, does their banking from, number one. And number two is they control a lot of the money for commercial real estate. So that's a crack. If it turns out to get bigger, that could be something that sends the market down like it did in 2023, 20% really quick. Maybe a buy opportunity, as the Fed did what they did in 2023, was come out and bail them out, as they always tend to do with banks. Now, it could rally tomorrow and be the end of it and just be a sort of a one-day wonder. But it is definitely something, one of the things that I think investors trying to still buy the market up here have to consider.
Yeah, talking about what is being digested by markets. Like you pointed out, gold has been pushing new highs near the $4,000 mark. And you have the US dollar hitting near 2-week lows against the yen. And that comes as we get data from the ADP survey on jobs, which I'm looking at as a bit of a disappointment. It seems like we saw a drop of 32,000 jobs during the latest month, the biggest slide in 2.5 years. Walk us through what this means for the U.S. economy.
Right. Okay. So we've got the sort of the equity space situated, what we just discussed, where the money's flowing. It's very familial, if you will, in that it's all following the same family, and now we're seeing a crack. And Ryan, we have talked about gold for how long now? My goodness.
Yeah.
We've been talking about gold for so long that just is it too late? No. Is it too late? No. And that's because gold is absolutely the mirror of all of this. We had the government shutdown, as you mentioned at the beginning. We had one under Trump in 2018. But there's a lot of differences between 2018 and 2025. Our debt is much higher. Our inflation rate is much higher. Our geopolitical situation is much more delicate. And so what gold is showing us right now, and it's the first time in 30 years that it actually took over the treasuries in terms of almost like a reserve asset. So everybody's buying gold, and finally people are waking up to gold. But some people think is bearish. I don't think so. I think the only thing that could be bearish for gold right now is if any of these major cracks that we're seeing geopolitically, with debt, inflation, are resolved, and that's not happening anytime soon. So also this year you mentioned two of the things that I call my trifecta of inflation. One is, of course, the precious metals, and silver outperforming gold, which it has in 2025. The second is the dollar, and the dollar is declining, already down about 10% this year. So the third thing we have to watch is the price of oil, and on particularly sugar, because sugar right now is low because Thailand says it has a record crop and weather hasn't been a problem. So if that changes on any basis and there becomes any kind of a supply-demand switch where there's more demand than supply in sugar, that's a social unrest barometer. And oil, which of course impacts everything, in terms of push inflation, the cost of everything from transportation to goods to people filling up their cars, heating their homes, etc. That's been pushed down. So many people are so bearish. But if anything happens to change that, and we know that things are potentially happening that could change that, and oil goes up, now we've got ourselves into a potential from inflation to a hyperinflation. And those are all the things that I'm watching. Doesn't mean I'm not trading and having fun and telling people what to buy, but we're switching a lot to hard assets right here, besides the gold and silver. Obviously, we bought natural gas, and now we're starting to look at oil and sugar and some of the other grains which have been forced down, but we'll see what happens.
Yeah, Michelle, talk about what to buy. So there's been a lot of predictions going around about how long the shutdown could last. I'm looking at 3 days, up to 2 weeks. So there is also a lot of speculation, or at least some chat about what to buy into with this playing out. So we could see some headwinds for defense contractors as well as anyone who's providing services to the government. Is that a place to look at right now in terms of buying on the dips?
Well, possibly, because defense obviously is also a huge, Trump just announced $1 trillion budget for 2026 for the military. So they're definitely planning to spend some money. And a lot of it is going towards space, of course, and defense and cybersecurity. So that whole area is probably going to do well. Of course, it could be a dip, obviously a temporary one because of the government shutdown. But also, we've talked about this before. You have to continue to look at energy sources because of the demands of electricity that AI are creating. And so that's why, even though we've seen great moves in lithium and in uranium and in other types of nuclear spaces that relate to that, now all of a sudden Plug Power, a stock that was basically left for dead, has been up like 40% because of hydrogen power. You have to look at oil and gas as that, too, as an area that's undervalued. And besides that, on top of that, some of the pharmaceuticals that are making deals with the government, a lot of them diet drug companies that we've also talked about, like Eli Lilly, for example, and now Pfizer planning to reduce their drugs and go through the government. These are also, biotech has come out of the doldrums as well. So there's opportunities around. You just have to really pick carefully, and like I said, you have to watch, because there's two things that could stop the train, whether it's temporarily or longer. And one would be some kind of a commercial real estate rural bank default, and the other, of course, would be some level of hyperinflation.
Yeah, for sure. Lots to watch, especially as the shutdown continues to play out. The big question, of course, is how long, and we are not likely to get the non-farm payrolls data at the end of the week, so that's going to be a big question mark. All right, lots to get into, I'm sure, but we'll have to keep it here for now. Michelle, we've been in conversation with Michelle Schneider. She is the Chief Strategist for Market Gauge Group. Michelle, thanks as always for your time and insights. Have a great day ahead.
You too. Thank you so much.
All right, catch up with you next time. Stay Money FM 89.3.